Hi, I'm David Stein of Money for the Rest of Us. And in this video, I share with you the difference between impact investing and socially responsible investing and ESG investing. That's a lot of terms. Socially responsible investing, what is that? Well, that means making investments based on your values. And it's typically done by excluding companies that don't agree with those values. Could be weapons manufacturers, could be big oil companies, could be nuclear power, adult entertainment, gambling, tobacco. These are companies that are excluded from a socially responsible investment portfolio. Now, how do they decide what to exclude? They use ESG data, which stands for environmental, societal, and governance data. In other words, SRI managers will use ESG data, rankings of companies, and then decide based on that data whether they should be excluded from the portfolio or not. Now, most SRI investing using ESG data is done via mutual funds, index funds, or exchange traded funds. For example, there's the Vanguard US Stock ESG ETF. So that is an ESG-based exchange traded fund that invests in US stocks. They also have an international version. You can invest socially responsibly with a bond ETF. There's also mutual funds that do this. An ETF essentially is a publicly traded security that trades on an exchange but replicates or seeks to replicate a particular index. And the index they're seeking to replicate would be an SRI index that uses ESG data. Now, what is impact investing? Well, this is a little different. Impact investing is the idea of having a positive impact, not just excluding something negative, but having a positive impact with intentionality. And typically doing so, the company or your capital is invested directly in a particular opportunity. And that opportunity earns a return. So this differs from just making a grant, because a grant, you don't get the money back and you don't earn a return. But with impact investing, you actually earn a return. Some examples that I have invested in is Wonder Capital. They're an investment platform, an impact investing platform, where the funds that I invested, I earn interest, and that money is used to finance solar panels or help companies install solar panels on their buildings and finance them doing so. Another is C-Note. C-Note is impact investing, where they take the money that I've invested with them. I earn about 2.75%, and that money is invested in community lenders who in turn take that money, invest in minority-owned businesses and other businesses that perhaps benefit a particular community, so that they're having a positive impact. Now, those are direct investments. There's also impact investing platforms. So Swell is an example of that. They have thematic portfolios. So they're stock-based portfolios, but they're vested in stocks of companies who are seeking to have a positive impact. Could be zero waste or disease eradication. So that's another impact investing portfolio. Now, probably the most important thing we can do to have an impact in not just our investing, our daily lives, is our personal choices. One of the things I've always struggled with when it comes to socially responsible investing is, even though these companies are excluded from a particular investment, in some ways that just helps us feel better that we're not invested in them. But those companies have already raised capital. When you buy a stock, you're buying it from just another seller. You're not buying it from the company. So the stocks continue to trade, and they will do well if the companies continue to earn profits, even if they earn profits in a way that you might not like. So it's better that individuals avoid those, and we avoid their products or avoid their services, so that the companies aren't able to earn as much, and then their stocks will not do as well. Because the reality with these socially responsible or irresponsible companies, if consumers and businesses continue to buy their products and services, then maybe you don't have as many people buying their stocks, or their stock's cheaper, has a higher dividend yield, and potentially could outperform the more socially responsible companies. So bottom line is, we can have an impact with our investing. We can invest directly in ways that don't just exclude companies that don't do things according to our values, but actually invest in a way that has a positive impact, be it directly, such as Wonder Capital, C-Note, or through some type of other investing platform like Swell. So happy investing. If you have any questions on this video, you can leave those in the comments, and thanks for watching.